we put a lot of product out in the Houston market up until 2008. And so we had a lot of power centers built, a lot of grocery anchors built. We had some mall expansions. But we hit the skids in 2008, 2009, and a lot of us just we're doing our best to finish up our projects and get them stabilized. You should know the perspective you're going to get from me today is largely a suburban story. We don't, as a company, we don't do specialty retail. We don't build malls, and so I get to choose what I tell you about. So today it's suburban. So. We are basically busy where Will and other home builders are busy. We represent tenants. We represent 60-plus tenants. We're a landlord rep on our own product, and we represent about 12 million square feet of space. And so that's kind of our perspective. To echo what Will said, jobs are key to our market, and we do a fair amount of work outside the city of Houston, but there is no market that we're in that is as vibrant as the Houston market. DFW is strong, but it's still not Houston. Houston's growing. Job growth is growing at about 4% a year, clearly outpacing the state and outpacing the nation. For retail to do well, the customers have to feel well. They have to feel like they have money in their pocket. And as you can see, the consumer sentiment index is on an upward swing. I know there's a lot of noise in the market that with the fiscal cliff coming, but the holiday numbers are very, very strong so far. We talk a lot about the retail internet sales and how that's going to kill the bricks and sticks or bricks and mortar stores. Internet sales are growing at about 15% a year. They've tripled since 2000 and 2003, but they're still just about 5.2% of the overall retail sales. So it's significant, but it's not going to kill us. In fact, the good retailers are actually building off of their online platforms so that they can deliver more information, a more meaningful experience for you in the stores by having great information, great presence on the website. But years ago, I've been a grocery developer for a number of years, and years ago, everybody predicted the demise of the grocery business with Peapod and some of the others came in. Well, they're gone, and the grocery business is still doing well. Bricks and sticks retailers are going to be around for a long, long time. The internet won't take us down. This is an interesting slide. This shows what retail sales. You see the hole that we had to dig out of in 2009, 2010. Sales dropped 15-20% here, but we've risen back up, and we're back up. In 2012, we'll be 10 to 15% above the baseline, with Texas and Houston, Harris County areas outpacing the rest of the country. Again, I said you're going to get a suburban story today. This is very interesting data when you look at, we monitor the retail sales of the various municipalities. What is happening? A lot of our projects are large and they require some sort of city participation in infrastructure and so forth. And I will tell you, as we come into a city, the good ones know exactly where their sales are coming from and what a project like ours can do for their city. And when you look at the trend line for 2012, sales in the Houston area and Houston proper are going to be up about 8%. But when you go out into the suburbs such as Katy, where they cannot put enough homes on the market, there's so much growth out there. Sales are up up 30%. Pearland Friendswood are up 25%. Conroe 17%. And so forth. Pasadena, Deer Park, LaPorte, surprisingly up 29%. We have centers on the east side of town that are 100% leased and some of the highest sales per store of some of our retailers, such as Dean Lane, my partner here, represents Ross, and he'll tell you that our Ross stores on the east side of town outperform those in higher income neighborhoods. So a lot of spendable income on the east side of town. As I said before, the holiday sales for Black Friday weekend were very, very strong. Customer visits both online and in the stores were pegged at about 35 million, up from 29 million the previous year. Retail traffic on the web to retail sites rose to 24%, up from 14% last year. 16% of that was via mobile devices. So smartphone saturation rate is about 55%. So as that grows, we're going to see a lot more people buying in the store or transacting from their mobile devices. Again, I don't think that's going to be the demise of us. I think it's an enhancement to us. If you're a retailer that does not have a compelling experience or compelling story, and I segue into Best Buy, you got a problem. This is Best Buy's comparable store sales over the last few years. You can see back in '99 when they were putting out all sorts of new thin screen TVs and so forth. Comp store sales were tracking as high as 14% growth per quarter. In 2009, they dipped along with everybody else, and then they rose again in 2010. The problem is then they dipped again, and they are continuing to dip. And Amazon and others with an online presence, when you can, when you've got a big ticket device like a big screen TV, and it's real simple to look at the attributes, the specifications, and say, I can save $100 and I don't have to pay sales tax on it, then it's real easy to click and have that delivered to your home. Now in the state of Texas has cut a deal with Amazon where Amazon's moving in with distribution centers, and they will start paying sales. You will start paying sales tax on your Amazon purchases in Texas. So that becomes a real equalizer. Our industry has been fighting for a Main Street, fair balance act in Congress, and we hope that comes about. Because it really, it needs to be a level playing field. The internet's had its start, so let's balance out. Here's a different story. So Kroger, who's dear to us, we do a lot of Kroger work. Kroger just released their earnings this last week and had their 36th consecutive quarter of positive comp store sales. 9 years in a row, they've had positive comp store sales. They are going to put out about $3 billion a year in capital for growth. They're a 100-plus-year-old company that continues to reinvent itself. There was a time here back when Randall's was the dominant grocer. Those of you that are old like me can remember when we're proud of our people and so forth. And Bob Zinke came out and said, we're gonna out Randall Randall's, and surprised everybody. And in 5 years, they did it. They continued to innovate and transform themselves. Well, we're now opening 125,000 square foot marketplace stores where they're selling bedding and furniture and so forth, and jewelry, and continuing to reinvent themselves. And that's really what it takes in the grocery business. We'll talk a little bit more about changes in grocery later. This is the story that Will told. Population growth, we're seeing about 150 to 180,000 people per year. 2015 we'll be approaching 7 million people in the city. This is my favorite map that MetroStudy puts out. This is the kind of the hotspot map, and you can see Katie's on fire. The Woodlands are on fire. You can't you can't deliver lots fast enough in those markets. If you look it's a little bit deceiving, but the inner city core of Houston is very red. It's a lot of individual projects going on there. Here is another metric that we track extensively. These are school enrollments. We're seeing out in Katy ISD almost 10% growth from 2008 to 2012. Spring, 10%, again growing due to Exxon and all the growth in the Woodlands. Kingwood up almost 8%. Conroe ISD, which is Woodlands, is up 8.4. Surprising one there was Alvin ISD up 12%. I've got to research what's going on in Alvin. If you see the little slide down there in the corner, Houston ISD is flat, and in this last year has a slight decline. You know, schools are no different than retail stores. They have to be compelling. They have to be competitive. And in Houston, you know, we've got upstarts such as KIPP, who I'm heavily involved with, and Yes Prep that are coming in and filling a void, and parents and students are saying, you know what, I want to move to KIPP. And so these school districts are the key to your business. I mean, if you know, home sales follow quality schools. So we look really hard as we develop, where are the quality schools? Because that's where we're going to have lasting value. If I put $30 million into a grocery-anchored project in a poor school district, 10 years from now I'm going to have a real problem. You know, the home sales are going to evaporate, and my retailer sales are going to evaporate. What's new in 2012? Not a lot of centers were built in 2012. The Tanger/Simon outlets in Texas City opened. Big success. You know, Simon, you've probably seen Simon's project out off of 290. They've expanded it once. People are parking in the grass out there on the weekends. It's so successful. The one in Texas City is equally successful. Walmart in the Heights open. Shops being built around that. Walmart in Northwest Park. Sienna Plantation. Brand new H-E-B in Fairfield just opened. Beautiful store. Kroger, Marketplace, and Academy on 1093 and 723 in Cinco Ranch open, and just a beautiful project, both doing very well. Again, the story is Suburban and its grocery. We have new entries into the market. Trader Joe's, some of you have probably been in as a really dynamic, exciting, kind of different, kind of niche grocer that does the highest sales per square foot of any grocer in America. They opened in the Woodlands. They opened at Alabama and Shepherd, and soon to open at Voss and San Felipe. 2 H-E-B's open, 2 Kroger's, 1 Joe V's, which is H-E-B's discount kind of box store concept, and 3 Walmart supercenters. In 2013, we're going to see even more of the same. You're going to see a new entry into the market. You probably read that Rice Epicurean leased out 4 of its stores to Fresh Market, which is a really exciting kind of specialty retail grocer with really fantastic produce and specialty meats that comes out of North Carolina. They'll open in 4 of Rice's locations. Rice did a brilliant job, kept all the real estate. We will be leasing all the balance of the space around them, so bring us your prospects for that. Aldi is coming into the market. Aldi is a sister company of Trader Joe's. 2 brothers in Germany own those. So 9 Aldis will open. 3 Sprouts. Sprouts is similar to concept to Whole Foods. They'll open at least 3 stores, maybe 4 next year. 2 Whole Foods will open, and 3 Krogers. These are the new shopping centers that should open next year. Fidelis has 2 projects, one at Fry and Grand Parkway. The Fry Center has Petco and Whole Foods. Gulf Coast has a new Kroger project in Kingwood at North Park and 59. Milestone is building a new Kroger Marketplace out in Spring, just south of the Woodlands. We are building a Cinemark and a Petco in Spring at Kirkendall in 2920. Ed Wolf has got his Whole Foods and Boulevard Place coming out of the ground. Probably won't open until 2014. Reed King has a wonderful site, project anchored by Whole Foods across from Vintage at Lowetta and Cutton. Fidelis has another great site at Fountain View in San Felipe that'll be anchored by an H-E-B. Probably won't open until 2014. Is that right, Lynn? Yeah, 14. And then H-E-B has a new store that is under construction at 306 and 105 in Conroe. I must pitch 3 projects that we have. So again, I mentioned spring. We're opening Cinemark in Brazos Town Center in Rosenberg. Really interesting deal. We have 2 million square feet that we've built in Rosenberg, and in a market that's been very, very receptive to us. Housing is growing. We have the Del Webb project across the street that's done very, very well. Willis, Texas, we built a Kroger marketplace and a Walgreens that is just absolutely off the charts. It's one of Kroger's top 2 or 3 stores in the entire market, and you would never dream it in Willis, Texas. But you cannot get a parking space. We're going to start charging for parking, I think. These are the new entries that are coming into the market. I mentioned Trader Joe's and Aldi and Sprouts, Fresh Market. Costco's under contract on 2 sites, one in Katy, one in the Sugar Land Rosenberg Market. Bye Bye Babies, a baby superstore concept owned by Bed Bath. Impress for Less is a discount soft gooder coming in. Pet Supermarket is kicking around. Unleashed is a small pet supply concept owned by our client Petco coming in. H&M opened its first store and is doing their second in Willowbrook. Company called Foreign Exchange coming in. Buc-ee's, I know most of y'all know Buc-ee's, but Buc-ee's just closed on a site in Texas City by the new outlet center, and they will be opening. We're working on a new Golf Galaxy Superstore concept that'll open their first store next year. Sundance Cinemas opened in Bayou Place, and really an outstanding kind of documentary independent film theater. One of the real coups is Memorial City got the American Girl store, which if you have daughters or granddaughters, this is a big deal. I live in City Center, and 3 women got on the elevator last night, and every one of them had an American Girl bag with them. All right. Rent growth. It's hard to really talk about rent growth holistically in our retail business because not all retail centers are created equal. But in well-anchored centers, we are leading the nation in rent growth, and we're projected to lead it over the next 5 years as well. Construction and absorption. Again, we have not built a lot of product, which has been really healthy for our business. Its space is very tight in Class A anchored projects. We had tenant clients that tried to come into this market and had to back out because we couldn't deliver 5 or 6 really good, well-anchored center options for them. So I don't think, though, that we're going to see a lot of big box centers getting built anytime soon. Target really leads that for us, and Target is still kind of capped out at about 25 stores nationally, and none of those are making it to Houston. Talk about the investment business. Cap rates are at historical lows right now. If you have a core institutional quality asset, you're in the 6s. A center like Fidelis's at Bunker Hill and I-10 is low 6s, anchored by H-E-B. That's really what the institutional buyers, the public REITs are all trying to upgrade to. A lot of them are selling off their suburban kind of non-core or sub-core assets and trying to segue into the almost super core centers. The unanchored strips are all over the board. You could see cap rates from 8.5 all the way up into 11 or 12 caps. It really has to do with the quality of the location. The single tenant net leased business is as strong as I've ever seen it in the 30 years I've been in the business. I mean, when you see McDonald's ground leases selling at a 4.25 cap rate, I've never seen such a thing. Now, a lot of that is driven by the extremely cheap cost of money now. I I mean, debt is, you know, at unheard of levels. People are borrowing, you know, 250 to 300 basis points above LIBOR, and LIBOR is, you know, 0.3 of a point. So on construction debt, it's very cheap. Permanent debt is, you know, high 3s to 4.5%. You know, we saw it coming that when you have an unstable overall economy like this, uncertainty, people put their assets in hard assets. They put their money in hard assets, things that they can touch, and they can touch the real estate business. And retail has a certain appeal to it. It's they know it, they shop it, and so there's they feel comfortable in that. Houston is one of the top 5 core markets in the country right now from the institutional investment standpoint in retail. So that's good. The negative is we don't have a lot of turnover in core assets. We have a high concentration of those assets in a few holders, such as, you know, Weingarten and Brixmor and others. So you don't see a lot of turn, but we have a very, very stable market, stable housing, and stable retail.